G'day there. Welcome to the 2024 edition of Closing Bell. I've had a great break. I hope you have too. Hope you're feeling ready to get stuck into things. We've had a crappy old market for a while now. It's been tough work for everyone. And I think we're all ready for things to move at the very least, rather than treading water, as we have in the ASX for a couple of years now. So I thought I'd kick off the year just looking at a really bird's eye view of what's going on, so you can get a sense of how I'll look at things as the market moves forward, and just having an overall sense of trends and that sort of thing, but being very aware that you just can't be too cocky, thinking you can pick every twist and turn in the market. It really is incredibly difficult to do that. All you can do is get a sense of trends, know where your line in the sand is, and really try to go with it when it's going. So, I think looking at this chart, when we look at a long-term chart of the S&P 500, and this is a log chart you can see on the side there. Hopefully you understand what that is. That's just showing, instead of the numbers being the equal distance apart, so instead of going 10, 20, 30, 40, all at equal distances, it's showing you percentage moves. So going from 10 to 20 will be the same as going from 20 to 40 and 40 to 80. So that's showing you 100% move is the same distance, and therefore the numbers will change more rapidly as you go up. So looking at that, that means we can make sense of the moves over a very long period of time. And, what do we really see here? The market doesn't go down back to where it came from, does it? Very often. We had the crash in 29 to 32. That was absolutely immense. But if you look at what's happened since then, really, what does the S&P do? It goes up, doesn't it? And it will continue to go up in more likelihood than anything else. But that doesn't mean it doesn't go through very long periods of treading water. And this is, I guess, one of the main things to say. We've got really long periods where just holding on is the way to go. And then you have, a generation, 20, 30 years of going nowhere. It doesn't crash all the way back to where it came from, but it does have periods of not carrying on, I guess, of struggling, of having multiple years of sell-offs, which would just, kill pretty much everyone. So those periods are the ones you need to be aware of. But the periods when it's rallying can really last a long time, right? So if we just looked at this, that rally going from, post Second World War up to mid 60s. So, there's 20 years of rallying, but then you've got really 20 years of going nowhere. So then from mid 80s, let's say, up to 2000, there's another 20 years. And, you could even start back from 1980 or so, and then that would be 20 years, wouldn't it? So it sort of gives you this sense of how long these rallies and periods of going nowhere go on for. We have a nice, big, strong move there. And then we had, yet again, a long period. This is going to, let's say, 2015 in the US. So 15 years where really there was big sell-offs, wasn't there, before it was ready to take off again. So this is really how it moves, these very long intergenerational, I guess, periods of big, strong moves where making money's like shooting fish in a barrel. And then you have long periods of going nowhere. Then another rally, huge rally, then look, long period. of really going nowhere. So I guess we could ask ourselves, looking at this, you know, perhaps we're in the middle of a nice long rally like this. Because when you look at this whole chart, this period here is the 87 crash. I mean, that doesn't look like anything, does it? When you look at this whole chart, and I tell you that this little blip here was the 1987 crash, you go, well, why was everyone so worried about it? It's nothing. And it was really just part of this very strong rally that went from, mid 70s, late 70s to 2000. So you could look at this period now. So if we look at that rally that occurred there over multiple decades, and we just, transfer it across and look at the next rally that occurred, pretty similar time, pretty similar size of the rally from the mid 70s up to 2000. Well, what if we were to just have a think? Well, maybe we're, taking off to do the same thing. So maybe we're just in the middle of a rally that's going to go into, 2034. And that would say that the S&P is going to 11,000 around then, before we may be in for another lost decade or two. So, I think that's a fair approximation. I'm certainly not saying that's what's going to happen, but just saying, if you're looking at very long-term pictures of how stocks have moved, you can see that this rally from the 2009 low, it really hasn't had big pullbacks, has it? The last year, like this sell-off that we saw last year, look at that, compared to everything that's happened. The crash in 29, the mid 70s, all the oil shocks, etc., the 2003, the 2008 crash. Really, that was just a blip last year, wasn't it? The market hasn't gone anywhere, but you're certainly not saying that this rally looks completely under threat, are you? And that's why when I look at these charts and say, well, when can I get a sense that things are turning down? I'm looking at these long-term trend shifts. You can see there, which is that 10-month exponential crossing below the 20-month simple moving average. Because how else can you get a sense of things tipping over? You can see from 2009, I mean, that kept you on the right side for a long, long time. And last year, it did tip over for a while into long-term downtrend, but has actually crossed into long-term uptrend. So very big picture, until we see that long-term downtrend again, well, you can be giving it the benefit of the doubt, saying, well, this could just continue rallying. I mean, why not? But I guess the main thing as we start off the year at the all-time high, and to consider in looking at these long-term charts, is one of those sort of key technical ideas of the false break or double top that can form. And what I mean by that, if we look at the lost decade or two in the 60s and 70s, what really happened? Well, you'd have, a rally correction, a rally which would break above the high and then fail to carry on. So that's the false break, and then turn down into long-term downtrend and sell off. If we look at it again, we have a new high created. The market goes to test that high, looking like it's breaking out, fails to carry on, turns down, long-term downtrend, gets absolutely smoked. And even if we look at this Again, look across here. There's a new high created, fails to carry on, sells off for what would have been a year or two before finally breaking out and then holding above that high, and off it went for a huge run. So the false breaks of the high or the double top can be quite dangerous. So if we look at, again, the 2003 to 2007 period, it's a similar story where we had the '03 high. Prices went to nudge above it, trying to break out, failed to carry on, goes into long-term downtrend, and then we have the '08 crash. So that is why with the market where it is right now, if we're looking up close and just thinking about what the market's doing right now, is to say, well, it is nudging up against that all-time high from a few years ago. So it's always just a period where you're saying, look, it could attempt to break through, fail to carry on, and if it turns into long-term downtrend, then watch out. Similar to, just in 2018, you can see trying to rally, fails to carry on, sells off for months. And even here, looks like it's breaking out, fails to carry on. There's the 2020 crash. And so that's the only thing I'm sort of looking at and thinking, well, momentum is up, things look good, and I'm giving it the benefit of the doubt. Now that we've had what was a retest once it turned into long-term uptrend. I said to you months ago, retest of the long-term, then turned up and created a buy signal. Well, I had to switch off any sort of bearishness I was feeling and, allow this to now play out. So for the moment, upside momentum is there, long-term uptrend, everything pointing that it could really break out. Man, I don't know. I've got to give it the benefit of the doubt for the moment. But currently it is at this major resistance zone. So it's all about allowing this strength to play out. And look, it could carry on for months, but being aware that if it then turns down and gives us a sell signal, and these moving averages, which are looking fine now, if we then have that happen and the trend starts to turn down, that long-term downtrend, then I'll be changing my tune in a big way because of that false break and things then turning down. So it really is just allowing things to do what they're doing, allowing these trends to play out. And, you just can't be arrogant to think you can pick every twist and turn when you look at stocks from the point of view of, 100 years and think about what's going on. You see that we can get very caught up in the short term and I think just kid ourselves thinking that we can know from day to day what's going on. Really, all you can do is say, I've got my sense of a trend. Is it breaking out above a major level and trending, in which case you're really going with it? Or is it potentially stuck in one of these periods and you just have to be very nimble going with those long-term trends? And so really big picture, just saying, while the long-term trend's up, give it the benefit of the doubt. It could keep going and it can really surprise to the upside when these things get going, can go for decades. So for me, with AI coming through, the potential of margins being lifted pretty dramatically across the board in many industries, I'm wondering, is the market ready to just power on? That could happen. But I will certainly, just allow the trends to play out. And that allowing of the trends to play out is saying, I'm not going to be cocky enough to think I can use my little brain to figure out what is an incredibly complex thing that no one has the ability to predict day in and day out. And so that's really the kickoff for me. Things looking good. Let's hope it can break out. If it does, going with it. I'm pretty strong on uranium, as you know. That's all looking pretty fabulous. That's the area that I'm really zeroed in on at the moment. And also rates continuing to fall, sort of thinking about what areas of the market I can be picking up, but I've been telling you all about that. So I think that's enough for today. Just really giving a bird's eye view as we kick off this year. And I will be across things a bit more in the next few weeks, having just come back from holidays. All right, cheers. Well, I'll talk to you next week.